Welcome back. You're with Money, and we're in conversation with one of India's best fund managers, Harsha Upadhyaya, Chief Investment Officer Equity at Kotak Mutual Fund. I know that not many details are available as far as the gold monetization scheme or the gold bonds are concerned, but it doesn't seem to have created the kind of buzz that was being expected. So from whatever we know, do they appear a viable option to you?
You are right. I think the buzz is still not there. While government has introduced gold monetization scheme as well as gold bond scheme, the awareness about the same is clearly missing. I think all the participants, including the government, the Reserve Bank of India and the participating banks need to do much more in terms of marketing and distribution and creating awareness of these products. Essentially, these products try to move idle gold from households into the system, wherein the investor also gets the gold back at the end of whenever he makes the redemption, plus he gets an interest on the gold that was deposited into the bank. And similarly, the gold bond scheme, instead of buying physical gold, you actually invest in a gold bond scheme, and at the end of the period, you actually get the gold back while earning interest during the tenure of the scheme as well. So clearly it's a good thing for both the investors who gets additional interest, and also from an economic perspective we will be able to reduce import of physical gold into the country, which has really caused imbalances in our current account deficit as well as fiscal deficit. So from a both economic perspective as well as from an individual investor perspective, these are right avenues to actually move physical gold into something which earns interest. Unfortunately, the awareness is still very low, and it's going to take time before investors start looking at this option in a big way.
Okay, so besides mutual funds then, what are the investment moves that you foresee for the coming year? Any new asset allocation ideas or trends?
Clearly, Sumaira, as I mentioned earlier, the penetration levels in the mutual fund industry are very, very low. Even today, the equity mutual fund penetration is just about 2 or 3% in terms of the overall households that are there in the country. So as long as the investments are not flowing into mutual funds in a big way, I do not think that the easy money making is going to go away from an investor. So unless he finds it difficult to make money, he should be looking at alternative investments or really something exotic. But at this point of time, there are many avenues like equity mutual funds, which are reasonable in terms of risk and also can give you high returns compared to many other asset classes. So and there is a tax efficiency as well. So given all this, I think it makes sense to look at equity mutual funds even going forward. In terms of overall trend, we do not really see a big change in the trend. I think there is a clear trend which is moving away from physical assets like real estate and gold into financial assets. So for example, equity and fixed income. I think this trend is likely to continue even going forward, as we do not see a great outlook for both gold as well as real estate as an asset class, and plus on a taxation basis they are quite inferior compared to equity.
And finally, Harsha, I have to admit that I wasn't very money wise until very, very recently. So what about you? I mean, are there any personal investments that you regret now in hindsight or just laugh over? And what's the lesson that they've taught you?
Yeah, most of my equity investments are through the funds that I manage. So fortunately, I haven't had much regrets on that, I must say. In terms of the advisor to investors, I think clearly a couple of basic things. One, think of investments from a longer term perspective and keep monitoring your asset allocation between asset classes. And before you start, you have a clear financial plan, because without a plan, nothing in life is going to be successful. So have a plan, and if you are not able to come up with a plan, please check with a qualified financial planner who will help you make a plan and then stick to it. I think these are the basic advice that I would give.
Harsha Upadhyaya, many thanks for sharing all your wealth of experience with us, and we wish you a very, very happy Diwali, and I hope the new year is all that and more. Thanks again for indulging us.
Thank you.
With that, it's time for another quick break. Still ahead is our tip of the week. Thank you.